Let's look at 3 dividend growth stocks to consider buying in December 2023. Let's get right to it. They're in 3 different sectors of the economy. The first one we're going to look at is in the financial sector, and this is Bank of America. Bank of America is one of the big banks, along with JP Morgan Chase and Wells Fargo and Citibank. So, Bank of America currently is trading at $32.98. A quick look at the 52-week range, see that the low has been about $25 and the high has been about 37. So we're towards the higher end of the 52-week range. Over the last year, uh, we've seen that Bank of America has been up about 2%, 2.5%. Year to date, it's been, not showing here, but year to date, I think it's been down about maybe 5 or 6%. I don't know why it's not showing on my computer. So the PE ratio is 9.78, which indicates that it is at a good price currently. So 10 or 11 and below, it is a good deal you're getting. Currently, if you bought for people buying shares now, you're getting it at about a 2.8% dividend yield. Let's look at the dividends. We think we get about 2.8% dividend yield, equates to about 24 cents. You're getting that every quarter. Annual payout is about 96 cents. The payout ratio is very low, only about 25%, which means they're only paying about 25% of their earnings out as the dividends, which means they have lots of room to grow the dividends. The 5-year growth rate of the dividend is 11.24%, and they've been growing their dividends for the past 10 years. So these are good signs for a strong company like Bank of America. Let's look at the dividend history. So over the last 5 years, the dividend has been pretty steadily grown. Over the last 10 years, again, you see it's been steadily grown, which is exactly what you want to see. So obviously you have to do more digging, more due diligence, but there are things you want to consider when you're thinking about putting your money into a company. The next company we want to look at is AbbVie, which is in the pharmaceutical sector. AbbVie, ticker ABBV, is a spinoff from Abbott Labs, maybe about 10, 12 years ago. Currently, it's trading at about $151.69. Over the last year, it's been down about 5.5%. Over the last 5 years, it's been up about 80%. And over the last 10 years, it's been up about almost 200%. So you would have almost tripled your money if you had money in AbbVie over the last 10 years. So capital appreciation is great. In terms of the 52-week range, it's toward the higher end. The low is about 130, high is about 168. So it's close to the 50. It's close to the upper end of the 52-week range. The PE ratio is about 13, which is fairly valued. The yield is about 4%, so you're getting a starting yield of 4%, which is not bad. And let's look at their dividend. AbbVie pays for about 4.04%, and this equates to about $1.55, and that's 4 times a year. Annual payout, you get about $6.20. The payout ratio is about 50%, which is great because there's room to grow the dividend. The 5-year growth rate has been 10.5%, which is very nice. That means your dividends will grow quickly. So that the current yield is good, 4%, and it grows the dividend, which is great. It's a nice combination. And they've been growing their dividends for about 10 years. So this is definitely a company you may want to have on your list to do more investigation. Let's look. Yeah, so this is definitely something you want to consider to do more digging. Let's look at our third company, which is another sector. It's in the consumer discretionary, and this is everybody's favorite, Starbucks. Starbucks is currently trading about $94.71. The 52-week range is between $89 and $115, so it's toward the lower end of the range. The PE ratio is about 23.5, so it's pretty richly valued. So you may want to consider waiting for the price to drop a little. But it's a quality company. The yield currently is 2.3%. And let's look at their chart. Over the last year, it's down by 3.3%. Over the last 5 years, it's been up about 50%. Over the last 10 years, it's up about 150%. So definitely there's capital appreciation. Let's look at the dividends. Starting yield of 2.3%, which equates to about 57 cents every quarter. The annual payout is $2.28, give you a payout ratio of about 60%, which is good. There's still room to grow the dividend. The 10-year growth rate is 10%, 10.35%. So you like to see that. Dividend growth history is 13%. So again, another great one to consider adding to the portfolio. Maybe waiting for the price to kind of pull back because that PE ratio is a little high at 23. Again, I'm not a financial advisor, but giving you information to think about for potentially doing more research. I'm the investor trying to increase our financial IQ so we can break the cycle of generational poverty. MD Investor out.